But let's move on and welcome on board Mr. Sunil Nalavadi, the Chief Financial Officer at VRL Logistics, to understand what is the strategy, what's the outlook going forward for the business. Sunil, hi, good morning. Thank you so much for making time. First up, just wanted to discuss this entire price surge that we are seeing when it comes to the fuel prices. Diesel prices have gone through the roof already. I know a part of your transactions allow you to pass on these costs to the consumers, but is it something which is impacting the demand and volumes now, given the huge spike that we have seen?
Basically, about fuel cost, yes, it is continuously increased. But when we see the last year increase in the diesel price versus the current moment, see, when prior to the tax cut by the government in the month of November, the cost was around 95 to 96 rupees per liter. As of today, again, average procurement for cost for us, it is in the range of around 97 to 98 rupees. So still it is at a controllable level at our end. That's why we have not taken any call on the rate hikes. And basically, we are very confident that the volumes are increasing, and we are expecting that around 20-25% growth in the volume in next financial year. So because of increase in the volumes, our fixed cost, which is almost around 30-35% to the revenue, will reduce as a proportion to the revenue. That is one. And the turnaround time of the vehicles will increase. And the rest of the space availability, like the godown spaces and other the transshipment hub spaces, will be utilized in the optimum level. So considering these benefits, we are hoping that still we can maintain the margins at current level of a fuel cost.
Despite the price rise, that's the word coming in. But Sunil, you've also announced a big capex plan. Could you share with us what kind of volume projections are you envisaging, which has given you the confidence to make that capex announcement?
Yeah, as I said earlier, we are expecting around 20-25% growth in the volumes. So out of this total capex plan, what we have announced, the post scrappage, whatever the scrappage of vehicles are going to be happen. So post that, the net addition in the capacity will be around 20%. So that still it is little bit lesser than what we are expecting the volume growth. If it is a volume growth is beyond that, the capacity addition, then the balance will be utilized or that volume will be handled from the outside vehicles.
Okay. Hi there, good morning. I wanted to also discuss the outlook on your windmill division, because I understand that you've transferred your windmill division. Can you walk us through how soon that's going to happen?
Yeah, basically we have signed the MOU with one of the company in Karnataka. Basically, we invested into this project in the financial year 2006-07. See, that investment is only for a one-time investment for a tax planning purpose. Since the project life itself is around 20 years now, another 5 years life is left. And currently the net worth is around 36 crores of this project. So we got an offer of around 48 crores from the buyer. So without that, considering it is a non-core business and entire benefits of a tax has been utilized till date, we decided to hive off this business.
The demand trend like when it comes to passenger transportation business, and are you looking at any capex plans for the bus operation?
Currently, we are not looking for any capex plan in the bus segment, and the utilization of the existing vehicles are at optimum level as of today. And we are seeing that a lot of passenger demand also in that particular sector. So we are expecting around 15 to 20% growth in the passenger number of passengers, so that the utilization levels will be again at an optimum level in the current year. So that business also will contribute better in the current year, what we are expecting.
Good morning. Just wanted to touch upon one other point which has a lot of the logistics companies, for obvious reasons, very, very concerned, which is crude oil prices, which behave pretty much like a small cap in recent times. But whichever way you look at it, fuel prices have gone up. There's, of course, all other kinds of inflation to also deal with. How have you folks dealt with it at VRL? What has it meant for your business?
So that's why we are more focusing on the growth in the volumes and expansion in the business. And as I said, the fuel cost, the net effect as of today, it is costing us additional 1 or 2 rupees as compared to the last year, when it was a peak in the month of October. So in the month of October, prior to rate cut by the government, it was costing us around 95 to 96 rupees. Currently, the average cost of fuel for us is in the range of around 97, 98 rupees. So considering this 1 or 2 rupees increase, we are not going to take a rate hike as of today. So we are very much confident that this will compensate by reduction in the fixed cost, and because the volumes are continuously increasing, we are very much confident that the fixed expenses portion as a proportion to the revenue will come down, as well as the vehicle utilization, the space utilization at a various godowns, it will increase. So that's why still we are very confident to maintain the margins. That's why we are not taking any call on the rate hike. Since other companies are increasing the rates, definitely it is good for us. So that our expansion, our addition of a new customers, definitely it is going to increase further.
If I were to see your stock price in the last 5 days, it's higher by 18%. Today trading soft, higher by 18% in 5 days alone. How often do you track your stock price? And when you see that kind of a movement, have you been able to figure out why is it? Is it because of the recent commentary about expansion and business outlook for the year?
So basically our more concentration is on the business side, not on a stock price. See, definitely we give, the good information to the people. We share with us, shareholders, and even we are conducting a lot of, interaction with the shareholders about our plans, about our expansion plans, and not only that, about our growth strategy in the coming days. So that is giving, good confidence to the investors. That's why the price may be increasing.
Yeah, Sunil, so also talk to us about your expansion plans, because you were looking at increasing your presence in South as well. Also, if you can talk to us about the client additions, what's the pace at that and what's the current utilization?
Yeah, just I want to highlight about the client addition. See, prior to this COVID, we used to operate with around 4.5 to 5 lakhs customers on an overall basis. Now the overall customers numbers have increased to 7 lakh plus. So that's how the growth in the customers as of today. And the new customers were contributed almost around 10 to 12% to the volumes in the last financial year. And we have planned to open around 100 new branches in the last year. Out of that, till March, we almost opened around 90 branches. And in the current financial year, also in the FY23, we are planning to add another 100 branches. Those are in the pipeline. So basically, we are targeting expansion plan in the northeastern part of India, the northeastern part of India, where actually our presence was very, very less, till date. So we want to expand the branch network in those areas. Basically, what will happen the moment we open any branches, any new branches in, say, for example, if we open a branch in Siliguri, that Siliguri branch will connect to all our 900 branches, existing branches. The Siliguri branch can book the consignment to 900 branches, and all 900 branches can book the consignment to Siliguri. That's why whenever we do this expansion plan, the break-even point or to reach the profitability of that particular branch will be very fast in our case, because we are having already established network.
Sunil, what's the trend that you are seeing as far as the e-commerce space is concerned? We have been hearing a lot about the demand momentum picking up. Is that something that you can corroborate for us?
No, basically it is not related to us. E-commerce is, again, it is a B2C market. We are not into that market at all. See, our focus is only on a B2B market. And just I want to highlight, how this growth is happening, even because of the changes in the government law with respect to e-invoicing. See, earlier e-invoicing limit, actually they started with a 500 crore turnover, but from April 1, that restriction is brought down to 20 crores. If any business entity having a turnover of 20 crores and above, they have to do compulsorily the e-invoicing. The moment they start doing the e-invoicing, the control on the tax or manipulation on the transactions will go away. So basically that's the reason why these unorganized players all these days to enjoy, now that is shifting to us. And some of the sectors just I want to highlight, say for example, coconut product, the betel nut product, the leather product, especially from the Kanpur and surrounding areas, even some of the tea products in Assam and surrounding areas. We were unable to get these consignments in the last over 45 years of business. Now there is a huge demand from this segment. Basically, the compliance levels have been increased and they want to have organized players as their transporter to have a better control on the compliances.
Okay, Sunil, on that note, we'll let you go. Thank you so much for joining us and speaking to ET Now today.